Commercial real estate investing used to require millions of dollars and deep industry connections. Those barriers to entry have fallen. Today, you can begin with zero prior experience. By the end of this 5-step process, you will have the framework of an automated commercial real estate portfolio, built with a starting balance of exactly $1,000. 3 entry points: REITs, crowdfunding, and ETFs. REITs own properties, offering quarterly income for $100. Crowdfunding pools capital for large properties, requiring $500 for 8 to 12% returns. ETFs like VNQ provide instant nationwide diversification per share. Once you select which of these 3 vehicles fits your budget, you can begin the 5-step action plan. Step 1. Establish your financial infrastructure by opening a standard brokerage account. Platforms like Fidelity or Charles Schwab provide these accounts for free. The setup process is identical to opening a standard online checking account. Step 2. Locate the specific asset you identified during the primer. For a publicly traded ETF, log into your brokerage account and type the ticker symbol, like VNQ, directly into the search bar. If you opted for crowdfunding, you will instead log directly into a platform like Fundrise to access their internal investment dashboard. Carefully verify each letter of the symbol. Mistyping these characters can lead to purchasing an entirely different financial asset. Confirming these details ensures your funds are directed towards the specific commercial properties you've selected. Step 3. Execute the initial $1,000 investment. Open the order ticket interface and set the primary action to buy. Input your $1,000 into the amount field and click Submit Order to process the trade. Verify that the system generates a confirmation screen. You should see a green checkmark and a unique transaction ID before you navigate away. With the order processed, you have transitioned from a spectator to a fractional owner of commercial real estate. Step 4. Automate the reinvestment of your monthly or quarterly returns. This is a dividend reinvestment plan, or DRIP. It uses the income your assets generate to automatically purchase more shares, increasing the total size of your holdings over time. Locate the dividend management section in your account settings and move the toggle to Reinvest in Security. Step 5. Commit to continuous education and active portfolio scaling. Treat this first $1,000 as the foundation for a larger strategy built on recurring contributions. This chart shows the result of 10 years of consistency. When you pair automated reinvestment with regular monthly contributions, the growth curve steepens significantly. Implementing this automation and scaling your knowledge transforms a single purchase into a self-sustaining financial engine. You now hold fractional ownership in warehouses, office complexes, and retail centers across the country. Compounding requires time to be effective. By securing these assets today, you position yourself to capture the growth of the next decade. To complete Step 5 and continue your education, subscribe to CRE Blueprint for weekly updates on the commercial market. Taking these specific actions moves your balance sheet from theoretical potential to actual equity. See you in the next one.